Guy told me one time, don't let yourself get attached to anything you are not willing to walk out on in 30 seconds flat if you feel the heat around the corner. I am never going back.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. Kind of excited because I built an AI model for the market. It gave me a projection for the S&P blow off top target. We're going to get into that. If you're looking for Bitcoin and crypto, that's my other video. Be sure to watch that video. Like and subscribe to the channel. Guys, give me a follow on X at Market Canary and consider joining our Discord community. You can join right through our website, marketmakers.trade. And if you want to support the channel, you want to trade the markets, check out our link on SimpleFX. If you live outside the US, fantastic exchange to be on. Become a Market Makers VIP. So guys, I spent a lot of time and I built this AI market model. I'm going to share with you the projection it gave for the blow off top, but I need you to help me name my computer, name my AI model. I want a cool name for this. I can refer to it in the future. Before we jump into the charts, I want to share with you a couple of video clips. We haven't done this in a while, but I watched this podcast called All In. It's essentially a group of very wealthy investors, venture capitalists, Chamath, and David Sachs, and a couple other guys, a couple more on the liberal side, a couple more on the conservative side, but they were talking about the markets. It's an hour-and-a-half long podcast. I clipped the best couple of minutes from it because I want you guys to hear what they're saying as well, because it goes in line with what I've been telling you for 6 months. So first, let's play clip one, Chamath, and then we'll come back on the other side and talk about it. Lee, roll it.
Yeah, I mean, look, if I was a betting man, which I am.
You are.
I think the free money trade here is to be levered long. I think you can make a lot of money right now. Why is that? The first chart I want to show you is the velocity of money. So what is this? This is the M2 money supply. It's a measure of how much money is circulating in the economy. What this shows is the impact of rates, where we were able to start to slow down and contract the money supply. But then as you saw, as the economy stabilized and people started to project what's possible in 18 to 24 months, you started to see money coming back into the system. That's what has given a bid to the equity markets. That's great because a percentage of this capital gets allocated into things that can generate a superior return to money markets. And that's where the bid to the equity market came from. So you would say, well, where does it go from here? The next chart, Nick, if you just give the second one, is look at how much money, and again, you can just look at the last 5 years, look at how much money is sitting in money market funds. And what this starts to show you is you have trillions and trillions of dollars of dry powder on the sidelines that will need to find a home. I think that Jerome Powell is in an increasingly untenuous situation because he will be looked at as politicizing the office of the Federal Reserve. There is enough data that can justify cutting rates. If you cut rates, and we've talked about this before, two things will happen. Number one is people will take some amount of money out of the money market funds because they will want to go and seek superior returns somewhere else. It will increase the velocity of money at the same time. You put those two things together, that is a bid to the equity markets. And so if we're at an all-time high today with rates at 4.5% and Powell is back against the wall to cut, the only road from here is probably up. And so you could see this thing get re-rated quite aggressively. And then the question is, do you do it where you manage your risk and you're short some stuff? Or do you just say, you know what, I'm just going to take it all up and take most of my shorts off and let the thing go? I think that if Powell starts an aggressive cutting program, either because he has to or because he's trying to keep his job, I mean, man, you could see the S&P at 7,000 very quickly.
So do you see what Chamath is talking about that happened for the marketplace? He says we have an incredible amount, new all-time high of M2 money supply, right? That's what I've been talking about for months. It's a catalyst. Remember, this market is catalyst driven. It's a catalyst for blow off top, combined with the new all-time high in money market funds, over $7 trillion just sitting there, which he believes will flow back into the market. I would add one more thing, the one big beautiful bill: deregulation, tax cuts, and stimulus vis-a-vis spending. That's a perfect fuel for the fire, for the blow off top. That's what I think is going to happen. You're seeing very wealthy investors recognize this as well. And let's play one more clip from David Sachs, my spirit animal, talk about how the correct way to trade this market has been in 2025 under Trump, because you guys heard me preach this all along, but listen to David Sachs.
Sachs, obviously you're a member of the administration, so I don't want to make sure people know you're not speaking for the administration, but I guess your personal thoughts on the markets here and what the right thing for Powell to do is, because he does seem to be in an untenable position. He's being criticized super heavily. He might even have his replacement announced, before his term is even up in the spring. And gosh, what is the reason for Powell to cut rates if everything's going so well? And then he would look like maybe he poured gasoline on what appears to be, a pretty robust economic fire right now.
That's not the right way to look at it. The question is just what's the inflation rate relative to interest rates? And inflation has come down all the way to, I think, 2.4%. So it's way down. We're back to a 2 handle. I think inflation has largely been licked, and it's time to start lowering interest rates, and that will be good for the economy. There's no reason for rates to be as high as they are. It'll also be good in terms of financing our debt. So I think that it is time for Powell to act, and I think he's being overly cautious here. He's being slow here, just like he was slow to raise at the beginning of the cycle. He's being slow to cut at the end of the cycle. And again, I think he's just afraid of being proven wrong here, but I think that the timing is right to start the cuts. Now, to go back to the question of how do you trade this market? I mean, I have a very simple idea, which is anytime that the media tries to sow doom or spread panic about the Trump administration's policies, that's a good time to buy. We saw this when Jim Cramer started touting the Black Monday that was coming, and Larry Summers has been out there constantly with his TDS. Whenever the media puts these experts on to tell you that there's chaos and doom, that has proven to be an excellent time to buy the dip. So absolutely. I think this is a very easy way to trade the Trump presidency.
That's our AI and crypto czar, by the way, but he's absolutely right. TDS has engulfed the marketplace. Wall Street hates Trump. The media hates Trump. That's not a biased opinion. Over 80% of the media coverage has been negative on Trump and his economic policies, and 80% of all the money from Wall Street went to his opponent. If you look at Bloomberg and Goldman, both saying the majority of the funds missed a lion's share of this rally. And what a rally they missed. So this just came out from Bloomberg the other day. If you look at the all-time high, 20+% drop, new all-time high, third fastest round trip in stock market history. Third fastest round trip. And if you look at the actual rally numbers, the strongest rally in 30 years in the marketplace, a generational rally, and they missed it. And they shorted the bottom, just like so many YouTubers. Guys, have an unbiased mind. Be aware, to trade this market, you got to be able to think about psychology, and you need to be able to understand the market cycle. And so many people don't understand either one. So let's talk about what we got here on the screen. So my AI model, drum roll, gave me this market top, 7,122.50, right? Right in line with my 7,000 to 7,500 prediction I got with Fibonacci. That's my AI model's market top, 7,122.50. This is the complete market cycle on your screen, starting with the pandemic. 36% sell-off, 120% rally, then a 28% sell-off, 76% rally, then a 22% sell-off. We should finish off with a 50% rally to the upside. This completes so many patterns, my 3 waves to a top, my ABC as well, wave 1, wave 2, wave 3, adhering to Fibonacci. You can do a wave count, a fractal wave count on this as well, starting at the pandemic. This gives you wave 1, wave 2, wave 3 top, wave 4, and the 5th wave will take you up to 71.2250, all the way up to 74.44 for that blow off top. Again, 7,000 to 7,500, complete market cycle. Let's look at the simplified version because this is what people want to see. Simplified version, summer rally. Remember, summer rally, I'm looking for that 6,400 to 6,500 for the summer rally. Then the 10% retracement, right? And if we go back and look at the fractals, I made that special video for you guys last Wednesday. Go watch the video. It's not long. It's all about the summer rally, summer sell-off. Remember, the last 2 summers in a row, we topped in mid-July or late July in the S&P, followed by a 10% plus sell-off. That sell-off, which I believe will take us down to about 5,700, is where all the big dumb money is going to come back in the market, and then a fierce rally back to the upside as they tried to collectively play catch up. Remember, 84% of the brokers on Wall Street cannot beat the S&P over a 10-year period. And this year, they're severely lagging because they let their politics, their bias get in the way of common sense understanding of what's happening in the market. So what we were looking for near term was, do we get a soft rollover? We're going to look at this zoomed in. Do we get a soft rollover and then a move up to that summer top, 6,400, 6,500? Remember, last year we bottomed July 2nd. This year we've been rallying into it. So do we get a pause, start chopping? Ultimately, I want to see if we can get to 6,400, 6,500 on the S&P futures here by mid-July, late July. That's what we've done the last 2 years. Then we get that retracement. 5,700 is the target. Guys, these are big trades. This will be a 10% plus move on the downfall. And if this move plays out from the 5,700 level, let's just measure this real quick. If this move plays out, 5,700, coming up to the AI predicted target of 71.2250, it's a 25% move, 1,400 S&P points. I mean, come on. If this plays out, guys, I really hope you appreciate this information because nobody is tracking the market this way. This is so important to see. Let's go ahead and look forward. What did we do last year on that fractal? Just to give you a comparison, this is 2024. We went sideways, pink box. We went sideways in June, got the last 4% rally, taking you up to a mid-July top, okay? Then the 10.5% retracement. Did we already eat up some of this rally? It's only June 30th, right? We know the next pivot coming up is July 10th. We'll look at that on the next chart. So I think this is still going to play out. It's played out the last 2 years in a row for a July top. Mid-July to late July. See if we get some type of soft rollover here in the marketplace before we get that final push up to finish up 6,400, 6,500, and then the beautiful retracement. And again, look at how this adhered to the cycles. The lunar cycles here played out absolutely beautiful. And here they are. July 10th is the next one, guys. So do we start rolling over a little bit, chop around in here, try to stay above 6,000, and then pivot out on July 10th? Do we sell off into July 10th? Again, unknown. We're going to look at this on the 8-hour chart, but this is what you've been doing. You've been rallying into it, right? Rallying into it. Is it done? A lot of people on YouTube seem to think it is. A lot of people still predicting new lows. I think you're getting a soft turnover if you do a soft rollover and then that summer rally like the last 2 years, but we'll see how it plays out. Let's look at this on the 8-hour chart. The ABC tracked absolutely beautiful. We got to 59.59 at the 1618. 237 point retracement. We got on top of it. We just got on top of the 200% level right here, 62.25. And the next key resistance I have is 6,280. Okay. Let's see if you stay in this box. Remember, this is a short trading week. We have the July 4th holiday, Independence Day on Friday, short trading week. Will people sell before the end of the week? I don't know. But if we do, I want to see if we get any type of rollover. If we hold this level, because there you go, 6,458, 6,400, 6,500. I think you're getting up there on the summer rally, guys, before the retracement. Could the retracement start from here? Of course it could. But again, the last 2 years in a row, mid-July, late July tops, not early July. That's when we bottom. So I think you have a chance for a soft rollover, but I think you're still getting that explosive move up for that move to 6,400, 6,500, then the top. The pain trade, right? Let's look at this on NASDAQ. NASDAQ went right to target here, 22,908. You're at 22,825. There's the bullish 3 rising valleys pattern. Everybody told you this was a bearish wedge, right? I told you it's bullish. You broke out to the upside. So we'll see again, just like on the S&P. Do we just top here, hang out, chop around, and then break out? If NASDAQ breaks out, 23,740. If the S&P goes to if the S&P goes to that 64, 6,500 level, looking for NASDAQ to make some progress at 23,740. But again, you could retrace before that. Watch what happens between now and July 10th. Do we form a little bit of a top, get a little bit of a drop? And if we start dropping, do we bottom for a breakout? Okay, that's what we'll be doing going into next week. If we look at how this played out again for Confluence internationally, guys, it's not rocket science. Australian market, April 7th low rally. Rallied up, soft pullback, 2-3%, right back within 1% or 2% of the all-time high. You did the same thing in the DAX. You did the same thing in the UK market. They're all hanging around that summer rally top. So we'll see if it plays out and carries through this year once again in the marketplace, guys. Look for my update later this week. Be sure to follow me on X at Market Canary. Watch the Bitcoin video, guys. Talk to you soon.